All right. All right, so let's go ahead and start the back testing where we're gonna go over again the same setup that we just went over, which are the double bottoms, the different variations. Now, just like before, all of our setups are gonna be starting based off the higher time frame, which is the daily. That's the one we're choosing to use today. Now, I'm just gonna show you one of the first variations where we do have a double bottom prospect here, right? But remember, when you go to the higher time frame, you always want to use your line chart, right? The reason we're using the line chart is because we're trying to identify the exact turnaround point. Now, for me personally, I like to use the trend line just to be as precise as I can, right? Like so. Now, if you're not trying to do all this extra work, you could just use the horizontal line. It goes straight across. All right. See how that looks? So what I'm doing is I'm identifying the exact turnaround point. Now I'm going to lock this in, right? This shows me the exact turnaround point for this. Now, remember when I was talking about when it comes to the double bottoms, sometimes the second leg itself does not hit the zone, especially when you use the line chart, right? That's because when you put the candles on, right, you will see the wick is the one that hit it. Now, sometimes you won't get the wick towards it, but a lot of time it will be the wick, right? So this is the first aspect of the zone. That is the exact turnaround point, right? Once it touched that, we know you actually hit the zone. Sometimes, like I said, you won't get a wick to the zone. Now, what we're about to do is add the next zone. The next zone, just like we went over before, is going to be the exact low point, the lowest the market went. So again, we're going to use the trend line like we did last time, right? We're starting it at the wick of it, right? Like so. And then we're going to bring it straight across. Now, one of the reasons we're doing this is because when we drop down to the lower time frame, right? When you drop down to the lower time frame, the 4-hour time frame, our chart won't be as noisy. Now, there's absolutely nothing wrong with you using the rectangle property where you get the exact turnaround point. Now, remember, if you're not going to use the line chart, which I recommend that you do, make sure your zone start at the close of the last selling candle, and then you dragged it to the wick, the lowest it went. Now the wick, the lowest can be the last selling candle, and it also can be the wick of the bullish candle. Now, if you pay attention, right, in the case of this one, the first bullish candle, that's the wick low, right? So we do have a double bottom, right? Let's go ahead and do a slight little annotation. Put this a bit higher. We're gonna do a slight little annotation to show you what I mean. So it came down, right? Turn around here, went up, and that's the wick of it, right? When the market came back down, this is exactly where it stopped at. Okay. And then this is the wick that they give you to hit the zone and then to go up. Okay. Very simple, just like we went over. So this is a variation where we get a double bottom where the second leg doesn't exactly hit the zone with the candle, the body of it to close at that point, but we did get a wick towards the zone. Okay. So let's go ahead and drop down to a 4-hour time frame. When we drop down to a 4-hour time frame, we're looking at this area right here for a engulfing price action. To be more specific, the bullish engulfing price action. Okay. Now, again, if you don't understand and you don't know what they look like, ultimate buying, price action, all the different variations of the engulfing bars for the bearish or the bullish is available in this book. Believe it or not, if you just simply trade the price action, I guarantee you have at least a 75% winning rate. All right. The next thing is just not over leverage and put in the proper stop loss. Okay. Um, let's go ahead and transition to the 4-hour time frame. Ooh, I should have collapsed it first. Let me go back to the daily. What I'm gonna do is I'm gonna compact it. So when I do drop down to the lesser time frame, it will be a lot easier to spot. Okay. All right. So see how we can see the line now? I mean, we can see the candles and everything. All right. Let's do a little bit more compacting. Okay. To make it a bit easier for us. All right. Here we go. We're going to stretch this up. All right. So here it is right here in the 4-hour. Stretch this up a bit more. All right. Wait, making sure it's the right one, of course. Nope, it is not the right one. Oh, it went too far. It literally went too far. Okay. Let's just create another one just to make sure we know this is the one we're talking about, that we don't waste a lot of time just looking for this. All right. Back to the 4. Minimize. Here it is. All right, perfect. Stretched out, moving forward. So again, when we are back testing, we are looking to see what the market did in the past, right? And we always start from the highest time frame, and then we go to our lowest time frame. Once again, that is the 4-hour that we use to pull the trigger. Okay, so I'm only going to show you the bottom of it. Okay, here it is. All right, so we had it right actually the first time. Now I want to show you what the first area looked like. That's how it looks like with the candle in the body. Okay. Now, when we go to the second hit, which is right there, okay, see it right here. What we're looking for now is the bullish engulfing price action after the market went towards the zone. Okay. Now, the key to this again is a proper stop loss placement after you pull the trigger, because we had 2 entries in here. Then they both play out, but one of them the market went against you first, but it did play out. So our first bullish engulfing is right here. Okay, see that right there? Your stop loss, see how it automatically went to the low point? So that's where we will place our stop loss at the last low. So let me stretch this out for you real quick and then go up, because I want you to be able to see the bullish engulfing aspect of it. You see that right there? So your entry would have been based off here. Right there. All right. That's the first bullish engulfing. Okay. Just straight to the point. Now, if you didn't see this as the first bullish engulfing, which is perfectly fine. Now you can see how after this long wick, it tapped the zone. Now, if you place your stop loss at the last low, yes, it tapped the zone and never wick you out. Now, if you wait after the tap to the low, your price action would be this bullish engulfing right here. Now, this is one of the variations of a bullish engulfing, where that bullish candle itself engulfed the last 2 selling candles. And there goes your entry, stop loss at the last low. Straight to the point. Like I told you before, it's always going to be an engulfing bar, right? And then, of course, after you take that trade, you transition from 4-hour to the daily, because you took a bit off the daily to target your next structured TP. Now, if you was looking at this right here, boom, TP got hit, right? If you're looking at this next one right here, right? Boom, TP got hit. Easy money, all right? So let's go ahead and jump to the next one. That way we could cover quite a few more. That way we don't extend the video way too long. That way we get a lot out of this. Okay, so we're gonna go ahead and look at another double bottom setup. Okay. Next time I do this, I wanna use my MT4 platform. It's gonna be a bit easier. When I show you this back test, it will allow us to do a top-down analysis a lot more effectively. You know, the trading view could be a little bit iffy, especially that I'm using the smart board. But the trading view is just the way it moves. It's not as smooth as I would like it to be based on what I'm used to. But look, now, again, you may not see it, but this is the last low, right? This is the turnaround point. That's the last selling candle, right? To the wick of it. So now I'm going to place this zone and I'm going to run it straight across, okay? Zone to straight across. This is the last low point. See that? Boom. And I'm going to drag it to the wick right here, right? So if you use the rectangle property, that's how it would look like. Now, a slight little bit of annotation, okay? If you pay attention, market came, hit, this is the zone itself. The second time it came back around, see that extended wick, boom, tap. Again, that's another double bottom, but if you make sure you identify the exact turnaround point, right? And then the wick low together, that's the full zone. Now, the goal is to see what the market give us at this specific level in the 4-hour time frame, right? Based on what it gives us, we'll take our buy to go to the upside. Now, of course, we already know that we are looking for the bullish engulfing bar, right? The bullish engulfing price action. Again, different variations. Sometimes you get big one big bullish candle that engulf the last two or the last three selling candles. And sometimes you get an engulfing bar where it took um, two bullish candles to engulf the last selling candle. Okay, again, different variations. All right. Now, of course, the most common price action that we are used to is when we get a single candle, right? A single candle that engulfs the previous candle. Like, here we go again, right? Look how crazy this zone look, right? Now, I want to make sure we're on the same page. When you place the zone either on the monthly, weekly, or the daily, please don't go back and switch it when you go to the 4 hour. We are trading the highest time frame, okay? We are trading the highest time frame. That means the zone is based off the higher time frame. When you go to the 4 hour time frame, you letting the market come to that zone itself while you wait for your 4 hour price action, your 4 hour PA. Okay. Now here it is, as you can see. Again, a slight little annotation, just so you can see it again, just in case if you don't see it. All right. This is the market itself. All right. Boom. And here it is. This is the close of the last selling candle. Notice the wick. Boom. All right. So that's two different that's the first one of the variation. That's two examples of how the double bottom, where the first one and the second one either wicked or did not wicked, somewhat come short, but it's still a double bottom. Okay. Now we wait for a bullish engulfing, and there goes our bullish engulfing right here. We got a one big bullish candle that engulfed the last two selling candles. You only have one job after that. Click buy and put your stop loss at the last low. That's it. Okay. And then you targeting structure TP, right? You could look at this or you look at that, but always remember when you take the trade based off the daily time frame, just go back to the daily time frame and target your structure TP. And there's absolutely nothing wrong with you using the 4 hour structure just to collect whatever you need to collect, especially if you are trying to put your stop loss in profit at a specific level. Okay. Now, in the case of this one, right, you enter here, right? The market bought up significantly, right? It bought up for 4 hours, right? 8 hours, 12, 16 hours, right? And then eventually it did come back down. But guess what? Either one, it wick you out in major profit or just a little bit, right? Or you minimize your stop loss by bringing it down to here, or keep it exactly where it's at because you're targeting the next structure high. Eventually it went up. Now, in the case of this also, if you're paying attention, when we look at the structure point, remember the 4 hour just give us continuations and first aspect of a reversal. What I mean by that is it hit the zone, give us a price action, or it hit the zone, give us a break and retest, right? So notice how it went higher than this one. It went above. You got a bullish engulfing up here, right? Again, it's all about your stop loss placement. If you took this stop loss here, it never wick you out. Now, if you did allow the market to give you a deeper retracement, if that's what you was looking for, here it is. But guess what? Your entry is still within the same area. It took 3 candles, right? It took 3 bullish candles to engulf the last selling candle. There goes your entry. Stop loss still at the last low, went up, and here it is. Okay. I say that to say after you took this trade, it did come back to retest this zone. And here's the best part about that, right? Just like over here, this bullish candle engulfed the last 2 selling candle. This bullish candle also engulfed the last 2 selling candles. There goes your entry to go up. Same target high got hit. Okay. In the 4 hour. Now I'm gonna go ahead and put the long position on just so you can see. All right, just so you can see how it looks like of how it would have. So there goes the first initial buy. Okay. Stop loss. Again, the low point is right there. Targeting TP high right there. And then once I transition it back to the daily, you see exactly how it looks like. So let's go ahead and collapse a little bit. Okay. Bring it. That's the first one. We got that break and retest. And then there it goes right here. All right. You see that? To the moon. All right. Boom, boom. So one of the things I also want to mention to you guys also, when it comes to trading the higher time frame, If you want to become a position trader or somebody that take a trade and let it go for weeks or months, I highly recommend you start taking your trade based off the daily time frame. Please don't worry about a big stop loss. As long as you're risking 1%, it doesn't matter um, if 1% is 200 pips or 1% is $500. If 1% is $200, all you got to do is drop the lot size accordingly so the stop loss equals that 1%.